Yo, what's up, everybody? It is Tuesday. No, I'm sorry. It's Wednesday, May 11th. I'm in Texas. And I wanted to make this video. I wasn't able to make it yesterday because I was traveling most of the day. So here's the thing, folks. Market's looking ugly. Prospect of a recession has really jumped up, and I'll tell you why. And this is something that I spoke about this. I mentioned this in my last video. We still have a very significant surplus, government surplus. May right now, we're running with a 50 billion surplus. So April, I talked about, that was a huge net liquidity drain from tax payments. Government ran like a 330 billion surplus. Now, I've been saying that what happens is they take in that money from taxes and it's spent back out in the normal course of spending. So, yeah, the market setback was understandable from the tax collection perspective, but we're still running a big surplus in May so far. We're into the second week of May. We're at a 50 billion surplus. So, that drain just keeps on draining. And there's no way that the stock market can mount a recovery when you're draining that kind of liquidity. We're up to 400 billion in, the last month and a half. And that's a real drain. Like I said before, that has nothing to do with the cockamamie QT and QE and all those things, or rate increases. I know the media is gonna ascribe the sell-off to, like today, you had a little bit higher than expected in the CPI. It came in a little bit hotter at I think the headline CPI was 0.3 for May. They were expecting a 0.2. And I think the core was 0.6. They were expecting a 0.4. Look, that's still way down from March. March, the headline was 1.2 and the core was, March, was 1.2. I'm not sure what the core was, but it was way up there. So, that reading, 0.3 on the headline and 0.6 on the core, that's way down from March. But the storyline today, the headline today was, the market is selling off because it was a worse than expected CPI. Look, there's no question that the CPI in April was cooler. It was down from March, but that's not the reason. The reason is very clear. They're running surpluses. Now, I'm going to say this, like by the end of this month, we'll be back in deficit. on May 16th, what's that, Monday, we're going to get a quarterly interest payment of about 42 billion, 43 billion. So that'll cut into it. And then in the normal course of spending for the remainder of the month, we got still a couple of Social Security payments and the regular spending. And by the way, Congress just passed a 40 billion bill for Ukraine aid. And that's going to go to really the military-industrial complex. It's not my idea of a well thought out stimulus, but that's a fairly substantial package. But this is it. I'm going to repeat, I was not expecting to see May running these size surpluses. And again, by the end of May, this surplus will be gone and we'll be back in deficit. But, the economy's only growing at like a sub 2% rate. I think second quarter GDP is forecast like 1.8. It's not bad. But you can't be running surpluses. Again, this is an education for you people out there who think, the government has to balance its books. This is exactly what happens. The only way the government can balance its books is by taking away the liquidity, the cash, the income, the savings from the non-government. That's us. And that is in no way, shape, or form a bullish development. And that's exactly what's going on. So any rally at this point, until there is no clear signal for a rally in the stock market right now, as long as we continue to have these budget surpluses. And as soon as I'll say this unequivocally, as soon as this thing flips back into deficit, and I don't know when that's going to be, but it should be sometime this month, we're going to have a huge, gigantic stock market recovery. But until that happens, and by the way, the longer this persists, the greater the probability or the possibility that we do go into a recession, that we have 2 negative quarters of growth. So that's it. That's the update. I'm in Texas. I'm heading for Big Bend National Park. So I'll probably be out of contact for a couple of days. I'm going to do some hiking in Big Bend. It's been on my list of national parks to visit for a long time, and I'm getting my chance to go do it now. But it's ugly what's going on. I told all you guys that, I was bullish and I was expecting a rebound, and I was, but I was not expecting to see May. I mean, historically, seasonally, if you look back at how these flows come and go, April obviously is always a big drain, but then you start to get the money spent back out into the economy in May, and that's why that sets up for the proverbial summer rally. You hear always Wall Street talking about the summer rally. This is the setup for it. But until this budget balance flips back into deficit, there is no support. And by the way, the stock market really wants to rally. You see that through the course of the day. You see attempts, the market comes in higher. It's been coming in higher every day. Then it gets whacked. It's just, there's no buying power. The rallies are pure short covering, and then there's no buying power just because that liquidity is getting drained out. That hole is not just there, it's still there in the bottom of the swimming pool. It got bigger. So, that's not good. The masonry guys have not shown up, and we need them to patch the hole, but that's not going to happen until, we need to see this budget balance go back into deficit. Anyway, that's it for now. I'm in Texas. I'm heading to Big Bend. I'll try to update you on these videos as often as I can, but I think probably starting maybe from tomorrow, or certainly from Friday, I'll probably be out of any kind of cellular range or anything like that. So have a good one, everybody. See you soon. Bye.